Time now to take a look at the day's business news, and we're going to start this time with the struggles in the Japanese economy. To tell us more, we're joined by Cole Stangler from our business desk. Cole.
That's right, Eve. The world's third largest economy shrank at an annual pace of 6.3% over the last quarter. Now that rate is worse than expected. Also the worst contraction since the middle of 2014, coming at an especially inopportune time. As uncertainty continues over the coronavirus, there are fears Japan could be on the brink of a recession. It's 2 quarters in a row of negative growth. Catherine Viet has more on why Japan's economy is slumped and what lies ahead.
Fears of a recession are growing in Japan after the government announced its economy shrank at the fastest pace in 5 years. The country's GDP fell by an annualized rate of 6.3% during the final quarter of 2019. A number of factors played a role, including a hike in the sales tax from 8 to 10% in October, which hurt consumer spending, as well as damage from Typhoon Hagibis in the same month. And then there's U.S. trade tensions dragging on exports. In December, the government approved a $120 billion stimulus package aimed at cushioning the impact of the sales tax hike. But ripple effects from the coronavirus are hitting Japan hard. China is its largest trading partner and also its biggest source of tourists, but now they're not traveling. Supply chain disruptions, too, have forced Japanese companies to either adjust or halt production, which will likely impact the country's exports. In response, the government says it's ready to take all necessary steps to deal with the outbreak and announced it's earmarked $139 million to fight the economic impact of the virus, including measures to enhance airport checkpoints and better testing capabilities.
Now, Japan, of course, isn't the only country where coronavirus fears are weighing on the economy. On Monday, Singapore revised its growth forecast downward for 2020 as the deadly illness affects tourism and trade. Its new growth forecast is within a range of less than 0.5% to 2.5%. It's down a full percent from the previous forecast. The city-state is a major commercial partner with China and has been hit especially hard by the virus. Let's take a look now at the day's trading action. Turning to the European markets to kick off the week, the FTSE over in London up around 0.25%. Gains also on the DAX over in Frankfurt, while the CAC 40 also seeing some gains. Investors looking closely at shares of Alstom as talks continue over a potential acquisition of Bombardier's rail division. Now a mixed bag on the major Asian indices to kick off the week. The Nikkei down 0.7% after that disappointing GDP data. Losses somewhat cushioned though by faith in the potential government response. Shares up in Shanghai over 2%. Several stimulus measures were announced over the weekend to combat the coronavirus. Meanwhile, the Hang Seng in Hong Kong also up 0.6%, and the Kospi and Seoul just around the flat line. Next up, it's the end of an era for General Motors in Australia. The auto giant announced Monday it's scrapping sales of its iconic Holden brand, first mass-produced vehicle in Australia. It's part of a wind down in the country and in New Zealand, and one expected to result in some 600 layoffs. Here's how GM justified the move earlier.
This was not a decision we took lightly. It was an agonizing decision. It's basically based on GM's global investment priorities. With a brand and a business, with a brand as iconic as Holden, clearly this decision could only be taken after extensive deliberation and after exhausting numerous options for continuing operations.
And finally, another automaker is grappling with some bad news. A German court has ordered Tesla to temporarily halt production of its first electric car factory in Europe. The company had already begun clearing forest on the job site, a move challenged by an environmental group. It cites potential risks to drinking water, among other issues. Under the new ruling, Tesla will have to wait for a final court decision before it can keep cutting down trees. The company has aimed to complete the highly anticipated plant by the middle of next year. Eve, the auto industry's eyes will be looking at that plant in Germany. Tesla hoping to get that first electric car plant up and running in Europe very soon.
Okay, Cole, for the business update, thanks a lot for that, Cole Stangler with us.